Thanks everybody for hopping on here this afternoon. It just felt like with all the craziness that it's good for us just to kind of come together and air whatever questions you have. It's obviously been a wild time. I've been around the block a few times when it comes to these markets. I first started trading when we kind of went into the craziness. I'm going to throw up a chart here for the heck of it, see if I can pull it up. But it's to give you perspective. You hopefully can see the vertical line there, but that's I'll probably put it on a log chart, give you a little better look at it. But this is right here, 1975, June of 1975, this bar right here. If you can see kind of the cross right here, that's about when I joined the Board of Trade, was right about that time right there. And of course, we've seen the stock market be on an historic run since that. This is just a log chart of the Dow. And we've now seen an enormous correction. So I've been through, various periods here that have been trying, not just of course, in the grains, as well as the metals, as well as the meats, as well as the stock indexes, as well as the interest rates. I've been through a lot of crazy markets. So if you just kind of look at the pencil there at this whole sideways period here was a market I was involved in. And then, of course, we've seen some big ups and downs here along the way, and here's where we are right now. But I got to tell you, I've never been through a month like we have right now. This is crazy. The ranges we've had, the volatility we've had in the stock indexes are really um, we're living through history. Of course, we can look back here. You can see the 1987 break right back here on the chart where my pencil is. If you can see the chart, of course, we had that big break, and that was a big one. And so we're similar to that in some ways. It reminds me of the 87 break, what we're going through. What we're going through right now is more dramatic even than we had. Again, you can look at the pencil back when we had the 2007, 2008, 2009 correction in here. Just a magnitude of the move, and even as we're starting the day right now, we're starting the day on a down note already. But and so we become real used to seeing the market have not only just 1% changes, but kind of starting the day off limit up or limit down, which is a 5% range. It's almost like our default setting is each afternoon we can come on, and with an hour or two of the start of afternoon trading, we're already at limit up or limit down. Then we lock up overnight, and it's this locking up that is just causing, I think, an horrendous amount of problems. I think we'd be better off without limits. Just take the limits off the market. If the Dow wants to open 10,000 lower, let it get out of the way and move on. But I think these lock limit ups, lock limit downs, expanded limits, I think actually are doing more damage and creating more volatility than we might have otherwise. And so I'd like to see the exchanges address that and move on from it. I mean, it's just been a crazy few weeks here, of course, and it's the kind of markets that I really refer to. These are the kind of markets that I'm really speaking about when I talk about defending your capital, being loyal to your money, more than being loyal to an approach to trading, more than being loyal to a global macro scenario, more than being loyal to a particular stock or commodity or crypto or whatever, is be loyal to your money. Protect your money at all costs, because we go through markets like this, an account gets bushwhacked by 50, 60%. then coming back becomes awful tough. And I'm going to be the first to admit that I was not good early in the early days trading in markets like that. So, markets like this send me to the sidelines, and that's where I am, and it's we're going to be. I'm down to one position. I took partial profits today on in the short Canadian dollar. Actually, profits in the long. I had long U.S., short Canada, as well as short Canadian futures, and I took some profits on the long U.S. dollar, short Canada, and what I have left then is what I have on. That's my futures position. And I've taken a haircut in IRA retirement type money. I've taken a haircut in these markets, right around the area of 10% of assets, but that was early on, and I've pretty much been neutral here, at least in the last week or so, in the equity markets, and so luckily I've had some really good futures markets trades that more than offset that. So I remain pretty solidly up for the year, but of course, spooked like everybody else. These are crazy markets. These are markets that drive men crazy. These are markets that are very difficult to become engaged in, and so I wish I could be a source of comfort and say, I see the bottom will come soon, then the market will turn and the market will be fine. But I got to tell you the truth, I don't know. We're going through human events as much as we're going through market events or health events, is we're going through a period of human challenge. And so I'm just not sure really whether the charts are any good or not. Of course, they have been in some markets, and they will be in the future. But for now, um, I would just say, if you've made money, that's great. Congratulations to you that you've navigated very tough waters. If you haven't made what you think you should have made, hey, welcome to trading. That's life. The reality is we always have too much of bad positions and not enough of good positions. I've been around for 45 years. That's been true for 45 years. It's going to be true for the next 45 years. That when we have a good trade on, we never have enough. When we have a bad trade on, we always have too much. When we get out early, we should have gotten out later. When we get out later, we should have gotten out earlier. That's the life of a discretionary trader, and these things can't be optimized. So that's kind of where I'm at. I guess that's all the preliminary result comments that I would really have at this point. Some of your questions may bring out some additional comments that I might have, but uh, that really kind of sums it up for me in terms of what I think. I have no idea. These markets are crazy markets. They're likely to continue being crazy markets. Um, and it's been a journey. So I'll open it up and just feel any questions that you might have. So Jolene, you can list them, and I'll try to take them in order. Thoughts about what might happen to any trades if the eurozone closes banks, cancels the paper currency, goes all electronic. I guess the question of counterparty risk comes up at a point like this in the markets. It seems like the tide is headed out, and we are about to find out who is naked. Yeah, that is a great comment. I'm probably getting paranoid here and happy to be calmed down. I don't see. We could certainly see the markets close. I mean, it's conceivable that the G7 governments decide that we just need to let everything have a breath here. We need to let things calm down for a while, and we could see the market seize. I would hope that doesn't happen. We could also see the banking system seize up. Of course, we saw that in 9/11. We saw everything freeze, the markets freeze, the banking system freeze. We could see those things. I frankly think the central banks, although I'm not sure the U.S. central bank is taking the right approach here, but I think it's in some ways been more orderly. Obviously, for somebody who's owned a lot of stock, it's not been orderly. It seemed chaotic, but at least from where I sit, this whole decline, while it's been shocking and while it's been volatile, it seems like the systems, at least in the U.S., at least where I live, seem to be operating more smoothly than they did, of course, 9/11. I don't see the Eurozone closing banks. I definitely don't see them canceling paper currency and going all electronic because the system is not set up for that right now. So I don't see that happening. Markets could continue to tumble. And of course, until there's some significant changes on what the Fed is doing, and the G7 in general will probably continue to see upward pressure in the US dollar, downward pressure elsewhere. But, we're going through turbulent times. I mean, there's going to be a point at which some of this turbulence calms down and we reach calmer waters. But I don't see us reaching calmer waters, but I also don't see the system melting down, I guess. So I don't know if that answers your question, is helpful or not. In time like this, in times like this, with the long-term perspective, it's been better to buy index funds or actually good companies we believe in because the latter will eventually recover and not get dragged down by the index. No, I think this is a great question. I have put to the sidelines an awful lot of the capital that I have in retirement type positions. I mean, for me, I have money sitting in retirement positions. I have money sitting in cash or T-bills, cash equivalents. Then I have money sitting in the composite of my trading accounts. My commitment to trading accounts periodically will be in and out with flexibility of individual equity futures as well as stocks. Uh, but my money that sits in an IRA positions primarily looks to be in individual companies. I think a person is, and so I try to separate those two in terms of monies that I have sitting in highly flexible leveraged accounts. I'm going to be interested in both index futures once I have patterns, and I have to have patterns because I don't pick bottoms, I don't pick tops. I try to play little chunks in between based on patterns, or in companies. Right now, I go through and I just don't see many companies because so many have had big declines in their stock price. Just because of those big declines, it would be weeks or months for me to get signals. But I come back to the fact that I would love to find some stability in the market to buy good companies. I think it's a wonderful time to start thinking and wrapping your head around being long good companies, especially if this market continues to drop. We get down 50% or even more. Keep in mind, in 2007, 2009, from peak to valley, the S&P index dropped 58%. It took a 58% decline. And, perhaps we are in for the same sort of thing this time. But, the world is not going to go away. The need for products is not going away. The need for people being engaged in life will not go away. It may change, but it will not go away. And so from a long term perspective, and I've told my two sons this. With idle cash, there'll be a point, and you want to employ it in good companies. You want to find companies that you think will be around 20 years from now or 30 years from now, and especially companies that perhaps pay a dividend, and you look to employ. But, obviously it's been a good decision not to do that yet. but there'll be a point in which I think we can do that, a point where we either get stability in the market and calmness, or a point at which prices get so cheap that you just, especially if you're younger, you take a chance. I'm 72. I can't have a 30-year price horizon or a 20-year price horizon, or for that matter, perhaps even a 10-year price horizon on companies. Although 10 years, I think I can. I'm good for that one. But yeah, so to answer your question, from a long-term perspective, I think you want to think in terms of good quality companies that you can buy in whatever sectors you think are going to be good sectors. So that's my thinking on that. In terms of my trading money on equities, I'll be looking for companies that have held up pretty well during this surmise, and have not had 80% declines, 50% declines, but companies that have held up fairly well, and for signs that those companies then are stabilizing. I mean, one example I think I put out today, and hate to just kind of run on and on at the mouth, but one company that I put out today was Costco. Costco is a company that, in the first place, it's a company I love because I shop there all the time. But it's really withheld the carnage pretty well. And as a matter of fact, like Walmart, it's getting real close to new all-time highs. Now, is yeah, again, the idea of me buying a company in new all-time highs, whether it's Walmart, whether it's Costco, whatever, I would not look at this from a retirement money point of view, but from a trading market point of view. I think finding companies that have survived this collapse in markets, stabilize, and then make new highs from a momentum point of view, they make sense to me as something to be looking at. Okay. Oh, I don't have any position on gold or GDX. I mean, we still have a point and figure target in gold that's higher, but there's nothing magic about targets. There's nothing magic about targets even based on a point and figure chart. We've had this correction's been a game changer for me. I mean, there's nothing for me to do in gold, in my opinion. And as a matter of fact, if anything in gold, the way I look at it is we've got a left shoulder ahead now, and now because this decline has taken us down into the level of the left shoulder low, I'm thinking, hey, maybe we'll form a head and shoulders top. And so for me, these markets that have had moves like this, I mean, for me to go to signal now in a lot of these things from a classical charting point of view now becomes a function of time. That there's just no way I can get a signal in these types of markets given where we are. I think that last question was GDX. Was that right? GDX. So, I look at GDX and, I have that kind of decline. There's just nothing for me to do. I mean, I can't explain this. I look at the chart. This goes beyond, beyond really what I think is comprehensible from a chartist point of view. And so, I'm kind of back to the drawing board. I'll just pull a monthly chart. I mean, that's somewhat constructive, but still, we're a long ways away from me having an interest. So this kind of decline has kind of destroyed a lot of these charts from the standpoint of me looking at markets as a chartist. Gold and Bitcoin are holding pretty well today in contrast to the S&P. Well, I mean, yes. I mean, but I come back again to silver. I still want to be short silver. I'm not short right now. But yeah, I mean, they've held pretty well in light of all that's going on. Have they held well enough for me to be interested as a classical chartist to buy? Not really with my time frame. Now, everybody's time frame is going to be different. I have my time frame. Other people have their time frame, and so I look at Bitcoin has has given a pause, and that obviously would be constructive to somebody who's looking for Bitcoin prices to go to 50,000, which frankly I was positioned to think at one point it still could happen, but the chart's going to have to show it to me right now. I mean, right now I have to go with what I think the trend is, and if you look at a chart, if I show a chart to, and of course it varies again, it's on time frame. You have to know where you're comfortable in terms of a time frame. But if I pick whatever time frame I'm like, just take this chart right here in Bitcoin and I show it to my 6-year-old grandson and say, is this going up or going down? He's going to say it's going down. And so I think sometimes as adults, we try to read too much into markets rather than just kind of going with the simple answer. I mean, in this time frame, and you have to know what your time frame is for trading. And frankly, this is about my time frame. This, in here, when I look at a chart that's 6 to 12 months long, that's kind of my time frame. That's my sweet spot. I look at this, and this is a chart that's going down. So, if it's a chart's going down and I know I can't short it because I don't short Bitcoin, I don't like the futures, there's nothing for me to do. So again, it comes to time frame. It may be holding up well, but it's not giving me anything that I would like. Comments on stocks. I haven't. I think I have. I think I actually have. I'm going back to the previous question, Jolene. Gilead. I think I have this chart on Gilead. I know healthcare is an area I really like. I mean, I really like the healthcare sector. I just think the demographics are such that that it will do well. I think I have it. Here we go. It's holding very well. I mean, it's making a high. This for me, I mean, I'm not involved in individual stocks because I've kind of said, hey, I want to take a breather. If I show this to my 6-year-old grandson and ask him which direction it's going to go, he's going to say it's going to go up. And I think that's the case. I'm not involved in this stock because I've kind of taken a lot of stocks off my daily. I need to look at this list, but this is a good looking stock. I mean, this is an extremely good looking stock, in my opinion. I'm going to come off of semi log here for the time being. But yeah, I mean, that's impressive performance. I wish I was long this stock. I'm not long this stock, but it's impressive looking. They're the kind of stock I'd want to be long. I'm not, but it's certainly, from a classical charting point of view, it's a really good looking chart. Possible bargains with good debt liquidity statements in EU Airbus. I'm not familiar with those because I don't really scroll through the EU. By the way, yeah, I don't really scroll through those. I do have them available for me to pull them up on my charts. It's just I don't normally scroll through them. Although if somebody sends me or posts on Twitter charts of these, I'll be glad to look at them and comment. So if you ever have a question on an individual chart, throw it up on member Twitter and I'll try to make a comment based on the chart that I see. Keep in mind, you send me a different time frame and I may have a different opinion, but I'd be glad to say, hey, this is a chart I'd be interested in trading or be interested in being long or would want to be long or whatever. But there's no question. I think there are some real bargains to be had in the EU, quite frankly. I was getting interested in the EU prior to the point that the markets kind of went all to hell here. Are EITs a good buy to build equity in the medium long term? Yeah, I mean, I think there's a lot of ways to build equity. Obviously, to build equity, we need up markets. Right now, we don't have up markets, but again, I am attracted. If I'm attracted to any company or vehicle that has long-term value, and obviously, obviously when a market gets clobbered like we have seen, things that had value before have no more value now. And so, there's an attitude I'd have toward markets as a trader and an attitude toward markets I would have as an investor. As an investor, I am kind of biting at the bit to move back in. I haven't, and it's been good I haven't, but every day that it goes down, I'm biting at the bit a little bit more to want to move back into an ownership position. So it's kind of pick your poison. What are you doing in your spare time these days? Well, tell you the truth, I'm playing a lot of pickleball. I played 4 hours this morning. And some of you may say, well, pickleball, what's that? I just say YouTube it. And so then I kind of catch the TV and find out what's happening in the world of COVID-19. And I am no longer going into stores. I went to Costco yesterday because I needed some medication, because those guys that are 72 sometimes have the tendency to need that. But we're not going into stores anymore. We can pick up our groceries at our local grocery store or at Walmart. And so from here on forth, we're just, with the exception of playing pickleball outdoors where I can, be separated from people. I'm just kind of hanging around the house. I'm trying to not watch the markets because I think, quite frankly, they drive me crazy. And I always find if I pay too much attention to the markets, it actually is not good for me. It's not in the best interest of my money to watch markets too closely. Any predictions on the bottom for SPY? Yeah, I don't. We've come down a long way. How much further we can go. Again, I will point out, I think I pointed this out today, is, we now have the possibility for a head and shoulders top in SPY. And so, that's something that going forwards, we never reached the 347 target that I thought we'd reach. But so going forward, yeah, we're this has all become an interesting game now, and this is something that I will definitely be watching in the S&Ps, because we now have a flat neckline. We went too far in the Dow. We went past the left shoulder low, but in the S&Ps, we're now right down to the left shoulder low, and so this would actually look like an outstanding head and shoulders top. Should we rally up, and should we find a rollover point, up toward the 285 level, 280, 285 level? Sure. Now, keep in mind, should that happen, that's going to change my opinion on being aggressive in long stocks. But there's a difference here between indexes and individual stocks. We could top out SPY in a major top, and I still would have interest in stocks if they're acting right, in individual stocks. I think we're out of questions. But what bottoming signs am I looking for? That's really a hard one, because the bottoming signs that typically have held true have not held true in this current decline, and that's normally just this big change of sentiment. It's the realization that there's mass capitulation going on, that people are just dumping stocks at all costs. Just get me out. I can't stand the pain. Yeah, I sense that on social media. Doom and gloom scenarios start appearing. But I think the big one is you get 90% down volume. And especially when you have a couple of days with 90% down volume. And I know that I asked Nautilus to run a couple of analogs runs for me, taking a look at markets that, were down a certain percentage from all-time highs, with 3% daily ranges, that sort of thing. And because I wanted to just see. But frankly, I don't even think those things really are valid anymore. The typical thing is that we used to look at to say this is a market that's exhausted itself, don't have not held true. And so I think to some degrees we're kind of in our chartered territory here. And of course, anything beyond a 50% decline in broad markets is going to get me interested in reemploying cash. But for right now, I got a lot of cash on the sidelines. But in terms of trading account, I scroll through all my charts today in futures and Forex. And quite frankly, boy, I'm hard pressed to find good trades. I mean, I've covered pretty much everything except for Canada. I'd be willing to sell a sharp rally in silver. I'd be willing to sell a rally in cable. That's British pound USD, especially if we get a rally in signs of a top. If we can, but generally speaking, I look across all of the markets I trade, and I'm hard pressed to find many charts that really make me interested to say, hey, here's a market that is starting to look promising for me, because they're just not there. Here in cable, again, we rally back toward this 120 level. And cable, I will take a shot of. I have resting orders. I have resting orders to sell the British pound just under the 120 mark. I have resting orders in silver to sell silver on a stiff rally, a big rally. Because quite frankly, I think, we're going to need big rallies in some of these markets. If you're the type of person that just wants to sell a rally in a downtrend, if you're just looking to sell the type of rallies we've already had, I think you gotta expand that a little bit. That there'll be a point in which, if you get the rally you really want to sell, you may not want to sell it, because we may get a rally that just really is vicious. So again, I look at my charts, and if I'm looking for chart construction that offers me measured risk, there's just not much out there. And so I'm thinking I'll be inactive in the markets for at least a month or two here. Charts are currently of less value. I didn't see that question. Given the impact on current event, what signs we look for when assessing return to market speculation? I want to see charts. There's a whole philosophy that stacks up on this question. And the philosophy is if I can't make money on charts, maybe I need to trade another way. I have found for me, that's not a good thought. That's not a thought I want in my head. Because someday charts will be good again. And I don't know if any of you are pilots. I'm a pilot. And I think the idea that, well, when charts are out of favor, I'll trade mean reversion. When mean reversion is out of favor, I'll swing trade. When not swing trading, I'll scalp. When not scalping, I position trade. That's the kind of thing that is equivalent to a vertical air speed indicator in airplanes, where you're always behind the curve. You're always trading yesterday, last week's markets. And for me, it's just better off that charts will be good. I look back at all my trading, and the reality is that the net bottom line I've gained as a trader, it's not an annuity. It's not a yield dividend. It's something that comes in fits and starts. And charts are really good for a period of time, then they're not good. And that's when they're not good, I need to try to have a sense for when I really want to start taking heavier bets or lightening up my bets, being more selective, less selective. But for me, I'm not going to abandon charts. I'm a chart pattern trader. I've been a chart pattern trader. I'll continue to be a chart pattern trader. They are not in jive. They're not in dovetailing with markets today. That's not reason for me to give up on charts. It's reason for me to do what I've been doing. That's basically being pretty inactive. Do you ever buy without a stop loss with very long-term view? For example, some people are buying Bitcoin, what goes 4,000, holding long-term. This could apply. Oh yeah, I mean, again, in my trading account, which is the largest stack of capital that well, no, real estate would be, and obviously I live in my real estate, but no, I don't in my trading account. I do in my retirement account. And in my retirement account, I will try to buy weakness and have an interest in buying weakness. And so, yeah, it's buying with the stop loss that I do in my active trading account based on patterns. But I do not, again, in real estate, I've bought some real estate recently. I love, if I can buy the real estate that I want and do it when prices become depressed, that's actually when I prefer to do it. How do you place a large order? Do you need to break it in multiple orders? Yeah, there's, I don't trade the size I once did. I mean, there was a time in my life when, I would trade uh, 150 bonds or 150 gold, the 100-ounce contracts. I don't do that anymore. I mean, the size I trade, if I trade 10 or 20 bonds, that's a big order for me because I've really reallocated wealth in different ways. Starting a few years ago, I started doing that. So for me, yeah, I don't put in an order where it's big enough. Now, even then, though, I may want to place an order to buy at the offer. In other words, that's a market order. I know there are a number of platforms, there are a number of software packages which will run even an order of 10 lots or 20 lots or 1,000 shares or whatever through an algorithm and place the order for you over some period of time and try to do it a little more intelligently. Interactive Brokers offers that. I have used that from time to time. I've just found for me, I don't trade large enough size now that when I want to get in a market, I'll get in a market. And okay, I think this is the question I'm on, Jolene. Okay. In Spanish flu, they close banks to reduce withdrawals. Are we close to something similar? Prolonged pandemic, non-acute pandemic like previous in history? No, I don't buy physical gold. I have some physical gold. I was very interested in buying physical gold during the bear market. I did buy physical gold. That was something I actually did buy here a few years ago when gold got down under $1,200. I was really interested in buying physical gold under 1,000, and I never got it there. So I didn't allocate what I kind of have. And in a deal like that, when I wanted to buy physical gold, often what I'll do is just kind of have a frame of reference. So I'll say, okay, if I can get it at this price, I will reallocate X percentage of my trading, or sometimes maybe even investment portfolio into an asset class. Yeah, I don't think that we're going to see bank closures. I don't think that we're going to, because I think that our systems coming out of 9/11, or and then coming out of the big shock of the mortgage crisis, I think our systems are more solid today than they were back then. That doesn't mean it's not going to happen, but I personally, I guess, and I hope I'm not surprised, but personally, I don't see that we're going to have that sort of thing. Anyway, so okay, looks like that's the last question. Wait, okay, I don't know if this is a question I haven't answered or not. I don't know, Jolene, you add these.
It should be 15. You should be on now 15.
Okay. Thoughts on S&P sweeping December lows? What are you watching for to see either more downside or confirmation for upside for? Well, again, I'm not a bottom picker, so to some degree, I mean, I really had a sense in the last couple of days we're getting close to bottom. Obviously, I wasn't right. I mean, so I try to sense what the desperation is of the public. That there's a point at which obviously there's a point on the downside where I think people. I talk about the common man or the composite man, where the common man said, "I don't care about the fundamentals. I don't care about the economy. I don't want to be in this stock." And I think there's a point at which the common man says, "I don't care about anything. I don't want to ever be in stocks again." Um, and I think that happened in 2008, 2009, October 2008 through March 2009, where the common man, it wasn't a question, I don't want to be in tech stocks because, of the fundamentals or whatever. They come to the point, I just don't want to be in stocks, period. I never want to be in stocks, period. I don't sense that sentiment yet. Maybe we don't get that sentiment, but I don't sense that that's a sentiment out there. And so, for me, I know a lot of people say, "Well, what do you want for the low?" I don't. While I'm always interested in thinking, well, maybe that would be fun to catch the low. In practical terms, it's really not something. It's not something I'm interested in. Now, again, I need to separate what goes on in my head in a trading mode versus what goes on in my head in an investment mode. In a trading mode, I don't care about lows. I don't care about highs. I care about chart construction and signals. In the markets right now, in a big bear market, are incapable of giving me a signal, because for me to have a signal, I need geometry. And for me to have geometry, it requires time. And so we could have a low, but then that's just simply going to be one contact point in a geometric construction down the line that gives me a trade. Now, on the investment side, if there are a number of companies I have on my radar screen, and all of a sudden, if I have a company that I thought was a really solid company and paid a 4% dividend, and I think it's a company that's not going to be hurt by what's going on in terms of global health, and all of a sudden is paying 6% dividend because the price of the stock comes down. Hey, that's something, again, I don't really care about seeing a bottom. It's just something that I'm willing to say, I like that company enough. And again, I'm talking on the investment side. I'm talking about deploying assets that are on the sidelines. And I can see, well, let's say a company like Procter and Gamble. The grocery store shelves in the US are empty. My guess is they're empty through many countries. Those are all grocery store shelves that are going to have to be restocked. That is a whole lot of manufacturing that at least has to take place in the next 3 to 6 months by packaged good companies. So I find a good packaged good companies that might have been paying a 3% dividend or a 4% dividend, that because of price drops is now paying a 5 or 6% dividend. And I'm willing to say, hey, as a guy who's 72, even if profits decrease for that company, it still may be a 3-4% dividend. I'm good with that, because chances are, even if I die, I can leave this stock to my grandkids and it's going to be worth, it's still a good company. And so I hope that gives you a sense for kind of left brain, right brain. I don't know if that's the right description, but it's kind of when I put my trader's cap on versus what happens when I put a cap on that kind of looks at individual stocks through a different set of lenses. Um, so again, I don't know if that's helpful to you or not. Your Nifty chart is coming along as you expected. What's your take on USD? Oh, this is a question that's coming from our wonderful factor members in India. And by the way, we have a lot of them. I have to ask Jolene to update the factor global map, and you can see. I think the last count I don't know when. I can't even remember the number of countries. Maybe Jolene will figure that out and put it on member Twitter. But it was most of them. And we have a great number of factor members in India, and so that's if you see me covering the Nifty or you see me covering the dollar, it's because I know that we have people that are interested. But I mean, here's what I've seen all along. In dollar rupee is we had this big either ascending triangle or this cup and handle, and now we built a continuation pattern, and of course the dollar's strong against everything, so it should be no surprises it's strong against individual things. But yeah, I mean, I think dollar rupee goes 79 to 80. After that, we'd have to look at it. So I think we're good there. Overnight liquidity seems to have increased. Good time to keep stops open overnight. I'm hoping to protect capital without having to wait for the market to gap the next morning. Hey, everybody! Welcome to the world of lock limit days. I've kind of talked about those over the years, and I think it's kind of I've had meetings with people where I talk about the old days of limit days and kind of look in this, it's a deer in the headlights look that I get back. And now you all know what I'm talking about when markets lock up. And I don't think it's good. I don't think it's good at all because we're locked up and you can't get if you're long you can't get anything sold at down 5%. And if it locks up at down 7, you can't get anything sold. It locks up overnight. It's not healthy. So S&P limit down, limit up. Yeah, I'm going to ask. It's 5%, 7%, 13%, 20% is what the formula is. But as I've looked at the limit down, limit up, I haven't sat and actually calculated when something's down the limit, is it that? But that's the formula they have at the CME. If it's down 5%, it locks up, down 7, down 13. Then if it locks up down 20, it closes for the day and there's no more trading. It doesn't expand past that point. And so I was looking today for some broker who might actually list these numbers on a real-time basis, where then it comes off the limit or it locks up and they're constantly changing and they have some sort of Excel program that's out there, a table that tells you for the major indexes, okay, this is presently our limit down price, this is presently our limit up price. If any of you find that, would you please post it on member Twitter, post the link, and also send Jolene an email saying you can find this information here, and we'll constantly be putting that out to let people know. In terms of overnight stops, I mean, boy, with the kind of moves we have right now, there's no way I would trade without overnight stops because sometimes you don't have your overnight stop in and it goes limit and then it opens expanded limit the next day, and an overnight stop means nothing if it's outside the limit range, because remember, overnight you don't expand limits. Overnight you go up or down 5% and then it locks up until the day session, at which point it goes to the expanded limits. And so yeah, and that's important to know because it's important to make sure that you have your stops within that 5% limit up, limit down range. And it seems like while people talk about the market only being up or down 5%, like that's a calm day. It's kind of pathetic. We've come to that point where up 5, down 5 is kind of something we expect every day. I mean, at the average true range, daily range, I mean, this is crazy what these markets are doing. This is beyond 1987, where we're getting back into 1929 type things here now. Do I think we're headed into a depression with everything shut down? I mean, that's the worst case scenario, and I'd hate to think that. Is it in the back of my mind? Do I actively use the D word? We are in a recession. Now, economists will say, well, we're not into a recession because we have to have certain metrics at certain numbers over certain periods of time. We're in a recession in the US. I'm sure we're in a recession globally. We're just, it's a matter of economic statistics catching up with reality. And so, we're there. Um, and so depression, I don't know. I don't know, what the metrics are to define that. I don't, if it's an unemployment number, if it's a GDP number, I don't know. But there, I'd hate to rush to the D word. I'm willing to rush to the R word willingly without the statistics backing me up. On the depression, stay liquid. Stay cash. Cash is, remember, cash is king in times like this. Try to be liquid. This is not a good time to be in debt because it's times like this when really the purpose of the economic world is to flush out debt. I mean that's what happens, and so hopefully for those of you who are in that state, I'm very sorry for you. I really am. But try to be as liquid as you possibly can. You come in the past, you wish you had taken trading profits and put in stocks, dividend growth. If one wanted to start that, would you use a scale-in approach with ETFs in a pullback like this? Yes, I would. I mean, especially I've been really angry. I've got a son um, um, who's 45 years old, 46 years old, and I don't. He has not really gotten into the stock market like my older son has, and I've been bugging him about it, and I've been telling him he's actually done some buying. He actually, I got to tell you, he bought his first share of stock a couple days ago, and so I keep telling him, now's the time. He's got plenty of time. He's still 15 years away from retirement or so. Actually, not because he'll have forced retirement at 57 as a U.S. government worker. But yeah, I wish he would have done this when he was earlier. And so, especially if you're younger than 40 years old, younger than 45 years old, yeah, find good ETFs that represent good companies. Don't do extra. Don't do the 2X. My advice to anyone is to avoid 2X, 3X ETFs, but find good ETFs. I mean, um, there's an ETF I'm interested in, and I got interested in it too early, but I'm still interested in it, and that's one right here. It's
Okay,
IBB. Yeah, I mean, I'm really interested in this, and this is one of the ETFs that my younger son bought at my encouragement because I think that this for my generation, us baby boomers are going to need to have companies in this ETF become very creative and provide solutions. And that will be not only true for my generation, but the generations behind me. And yeah, so this is an ETF I'm really interested in because I think it has solutions for the future. And so there are other ETFs you might come across. It may be tech ETFs, or maybe a whole variety of ETFs. And so, yeah, I'm interested in this ETF. Then there was a question. I think we'll make it the last question, Jolene. I think it's different this time? I don't different than what? I mean that the markets recover. I'm guessing that it's maybe where you're going with that. In the past, we have times like this, and the market find their underlying strength, and they're off to the races. If that's what you're thinking of, it may not be different this time, but then that won't make it any different than 1929 or 1968. And so, different is always, there are cousins to the word different that have a family look, but enough difference that you sometimes don't recognize that they're part of the same tribe. And so, yeah, I mean, maybe different than what we've seen the last 20 years, but not different than what we've seen historically. I mean, if you go back, in the Dow, you get back here in, you know, I mean, I don't, that's not a prediction, but even if the stock market absolutely falls apart, it's not going to be different than 1929 and 1932. And so, to that extent, no, it probably won't be different. You take 1987, maybe it'll be a 1987 event again, where you have this type of correction and then you recover. Maybe it'll be similar to 1968, and in a 1968, I'll try to get to 1982 here, because that's a period where markets just went flat for a whole generation. We saw a top in 1966 that we really didn't take out then until 1983. And so you had a period of 15 years where the market chopped up, chopped down, and went nowhere. And so, do we fall into 1987? Do we fall into 1965 to 19, I guess it was 18 years, 1983? Do we go into that period? Do we go into a 1930s period? I don't know. It's hard to say. I do know this. If you don't lose your capital, you can keep your capital together. You're in a position to position yourself, and you think long term. You think the whole business of growing wealth is a marathon, not a sprint, and you keep your capital together. You'll miss opportunities. You will miss opportunities. I guarantee you that. But you will catch enough that it'll impact your life positively. And so, I mean, that's Grandpa Peter talking here. But I think I've seen it just about all. Or at least I can look at charts and imagine what it was like, or hear parents from, I heard stories from grandparents. So, that's my word is, protect your capital, use stops, always, even in ETFs. You can always get back in. You can always get stopped out and come back in a week later, a month later. You don't always necessarily get back in at the same price, but you can get back in. And so, you want to think beyond the next trade or series of trades. So, okay, Jolene.
Peter, I'm sorry, Peter, if you can just peek at that last, I just have one more question to you because it's directly related to your IBB. Yes, thank you.
No, I'm interested. I have stuck with some of this. As a matter of fact, this is it's been painful, but I believe in it enough that for those who are interested, I'll talk a little bit about that. I'll just kind of talk about retirement money, because that's not trading money. In trading money, I'm still interested in this ETF, but I'd be interested in a new high. And, I take a position, and at most I'd risk 70 basis points, 0.7% on the trade. I'd size it accordingly. It would just be another trade in the series of trade. It wouldn't have any significance. Because in my trading account, I'm more interested in the price scale on the right side than on the name up on top. I trade price. I don't trade instruments as such. But as in terms of retirement money, I've sat through this thing, and as a matter of fact, I wish I would have picked some up here in the last couple of days, because I think that there's a chance that we're close to a bottom. Today was a strong day up, which I think is a good signal. And I will look at this overnight. This may be an ETF that I pick up tomorrow. This is an ETF that my son bought yesterday. Um, he also, I got to tell you, bought Oxy too at my encouragement, and that wasn't such a good idea. But he bought a few others, and he made his Oxy was his first stock trade. The poor guy, and he bought that earlier in the week, and he's underwater on it. But I think he's got the proper attitude, as he bought it with his grandkids in mind, and so this is the kind of thing. I bought some IBM. And so, yeah, I'm interested, but the way I'll do it is, let's say I have a block of money in a particular IRA account, and I do trade a couple of IRA accounts a little bit different. There's my wife's IRA. I'm only in dividend stocks, and I'm committed. I'm about half committed there. But in a typical IRA, I will look and say, okay, I want to own 10 stocks, and so I will take, kind of in my head, I know what amount I want to kind of split it equally into kind of 10 units. And so I'll look at 10, maybe 15 stocks. I'll own between 10 and 15 stocks in order for me to go 100% invested in a particular account, is I kind of break it down that way. And this is definitely an ETF that I do not mind being 10% committed to in an IRA account. And so again, there's other ETFs that I look at. For me, SPY, QQQ, DIA, those are trading ETFs. Those aren't investment ETFs. This is the kind of thing I'm looking at as for an investment. So anyway, yeah, I'm interested at this price, but this is the type of thing where I'm in it to own it. I'm not in it to trade it in retirement money. I'm in it to own it. And this is not the type of thing I'm going to have a stop in. And although there's probably a point of pain that I'd be willing to reconsider, but for the most part, I'm in it. I'm in it because I believe in it. So, okay, that's it. Jolene, I'm done.
Great. Thank you, Peter. We appreciate all of you. Thank you for being Factor members. Thank you for posting on member Twitter. We really like having that platform to be able to talk to members with. So just thank you for all of your comments and just being a part of that and being a part of the Factor community.